welcome to our revision session, Business Tax. My name is Anne. You may already have joined me for a few of the other revisions, but here we are again. And in this session, we're going to have a look at task number 6, dealing with taxable profits for companies and the corporation tax that they would pay on those profits. So let's move into our revision material and learn a little bit more about task 6. This task is about calculating then the profit as well as the corporation tax on that profit. It's worth 10 marks, so 12 minutes in the exam to complete it. The task briefing, as always, precedes our task in our materials, just as a way of a revision to give you a little bit of a reminder about some of the things to consider in terms of this particular topic. So your options are to actually have a read through that task briefing now to remind yourself about this topic, or maybe go through the question with me, see how it goes. And if you do think, goodness, there's a lot of that I didn't remember, then you go back and look at the task briefing afterwards. So I shall leave that up to you, but it's there for your reference. The other thing about this task is that it's going to be helpful to have the reference material available. It's available to you in the exam through pop-up windows. And being as we're dealing with the amount of corporation tax that the company is going to pay, and that there is a section in the reference material headed up corporation tax, then that's the bit that we're going to need. So I'm going to leave that open on my screen there so I can come back to it when I need it. So here's our example task 6. Bobsy makes their accounts up for the 18-month period to September 2023. Now immediately I have a little alarm goes off in my head. And I think when you've been doing tax for a little while, that tends to be what happens. So I see that and I think, okay, no problem. Let me just work out when the start date of this period would be. So I know that 12 months back would take me to September 22, but what's another 6 months before that? Let's just count backwards. So we've got September, August, July, June, May and April. So 1st of April of 2022 must be the start of the period. And it ends in September 2023, an 18-month period altogether. And the reason I'm saying I get a little alarm bell in my head at that point is because I know that companies for tax purposes can't have an 18-month period. The rules say their maximum chargeable accounting period is 12 months. Which means I'm going to have to actually split this 18-month period into 2. And they don't let me just choose, okay, well, I'll put 9 months in each. That looks like an even split. That's not how it works. The rule says you have to have the first 12 months. And then you have the remaining 6 months to make up the 18 months altogether. So always 12 months to start with if you have a long period. So that would then take me from 1st of April through to 31st of March of 2023. And then I'd have my remaining 6 months being April, May, June, July, August and September, counting on my fingers. I know you can't see that, but I've been doing this a very, very long time. Still count on the fingers. It's a bit foolproof. So I just want to check I have still got 6 months left to get me from 1st of April through to 30th of September. So now I know that. What else do I know? The company made a capital gain in June 2022. Of £29,850. Fine, I'm going to just pop that in there. Gain in June 22. Just helps me visually rather than reading the paragraph again so many times. Then it makes a gain in May 2023. So there was my cut-off there for March. So make a little note here. There's a gain in May as well. May 23, there's a gain of 11,225 on the sale of a building. And its trading profit for the period, so presumably for the full 18 months, is £760,500. Now I haven't actually answered the question yet. All I've done is shown you how to dissect the question, how to understand the question, how to think about the implications of the question, perhaps before you even get to the requirement. Because I sometimes think when you get to the requirement, you can create a bit of panic. So if you can almost do like a little bit of a brain dump before you get there, which is just thinking about, okay, what do I understand about this? Why have they told me this? And just make some notes to get that data from the question into a format that works a little bit better for you, then the question is going to seem much more manageable when we finally get there. And the question says, state the amount taken into each of the following accounting periods. If your answer is 0, put 0. So how much capital gain in each period? Well, having done the timeline, I can now see quite clearly the first gain lands in the first period before that cut-off. There's my 12-month cut-off. So the gain for the first period is 298.50, and that all comes in the first 12 months. The next gain was 11,125, and that all belongs in the second period because it came after the first 12 months. It's in the second 6-month period. And then in terms of the trading profits, I know what they are for the entire period. So that one I'm just going to split according to months. So it's an 18-month period, so I'm going to start by dividing it by 18 to find out what 1 month's profit is. And then I'm going to multiply by 12 to find the profit for my first period. And I'm going to multiply by 6 to find the profit for my second period. I am just going to add those two together at the end of this, just to be sure. I like to do little double checks when there's an opportunity, because if my profit doesn't add up to 760,500, then it suggests I've lost a bit. So do add up the profits there. Right. Next is to tick the correct box to show whether the following statements are true or false. Taxable total profits are adjusted for all dividends paid. No, they're not. Profits actually come out of the profit once the tax has been paid. So as far as we're concerned in our computations, dividends have no impact on tax at all. So my profits are not adjusted for dividends. Dividends are paid out of post-tax profits. So that one is definitely false. The next one. A company with an 18-month accounting period, like the one that we've just seen, will calculate capital allowances for the entire period and then time a portion between the two chargeable accounting periods. So they're saying that I would calculate the capital allowance, let's say it was £100,000, for example. I'd then divide it by 18, multiply it by 12 to get the bit for the first period, multiply it by 6 to get the bit for the second period, just like I did with the trading profit. Absolutely not. I only do this way with the trading profit because that's the period the accounts cover. My capital allowances are going to be worked out from scratch, so there's nothing to stop me working out the capital allowances for the first 12-month period and then working them out again for the second 6-month period. So I'm actually going to split my capital allowances into two computations, so that is false. I would have a 12-month and then a 6-month computation. So two separate computations relevant to the period, first 12 months and then the remainder. A company with a 9-month accounting period that ends in January 2024 will use the corporation tax rates applicable for the financial year 2023. Well, the financial year for companies is a slightly different idea to the fiscal year for individuals. And a financial year runs from the 1st of April. The pen went a bit skew. The pen is a bit skew. There we are. 1st of April runs from 1st of April to 31st of March. And if we're talking about, it says financial year 2023, that would be a year that then starts in April of 23 and runs to March of 2024. So when it talks about a financial year, it's referring to the start date. So 1st of April to 31st of March 2024 is the period covered by FY financial year 2023. So does my company with a period end of January 2024 fit into there? Well, it certainly has the end fitted in there, doesn't it? January certainly slots into that period. How long is this period, it said? 9 months long. So that means that my 9-month period, and go back to February, 1st of May of 23. Just check we've got that right. May, June, July, August, September, October, November, December, January. Yep, that's 9 months. So my 9-month period will be from May 23 to January 24. So that actually does all fall precisely in to that financial year. It overlaps completely. There's no part of that that is outside of that financial year. So my answer is yes. Had my year started in, say, February of 2023, then it would have overlapped 2 financial years because the first bit would have been in FY 2022 with the second bit in FY 2023. But that's not what it asked. Okay, and then last one, the formula for marginal small company relief is 3 divided by 200 times TTP minus lower limit. Well, that one, to be fair, you don't have to learn because you've got reference material to help you. Let's just read it again. 3 divided by 200 times TTP minus lower limit. Let's check what the formula says. It says as marginal company, small company relief, 3 divided by 200, good so far, minus upper limit, minus upper limit, less TTP. Let's just check this one again. This one says TTP minus lower limit. So along the right lines, some of it's right, but no, that is incorrect. So use the formula sheet to help you. It should be 3 divided by 200 minus, or multiplied by upper limit minus TTP, like that. So not right. So that's one done. We then have Grange Limited. Grange Limited has the following information for a 6-month period. Now that rings an alarm bell. Always, when I'm dealing with tax, anything that's not a full year sets off a little alarm in my mind. I'm not quite sure why yet, but I'm going to read on. But they have a 6-month period. Taxable total profits for that 6 months are 95,000, and Grange has no associated companies. Also very, very important for corporation tax. Can we calculate the corporation tax payable? And the answer is absolutely we can. But the amount of tax that a company pays depends on how large the profits are. So I need to go back to the reference material to see what the rules are. And it says that there is a lower limit of 50 and there's an upper limit of 250. Let's just understand what that means. So let me just sketch that out on here. So let's put the lower limit in, 50,000. Put the upper limit in, 250,000. And what's it telling me? It's saying the small profits rate of corporation tax from April 2023 is 19%. So small profits must be for the smallest company and the smallest profits. So I'm going to put 19% at the bottom. The main rate of corporation tax is going to be right up at the top there, and it's going to be 25%. And anything in the middle is going to use the marginal relief fraction. So we're going to use the fraction 3/200ths multiplied by the upper limit minus TTP. So I would look at the amount of profit a company had made. I'd sketch out that little diagram on my workings paper alongside the reference material. And then I'd work out where the profits for my company fall. The only thing I need to be mindful of is a little asterisk here, which says, watch those limits. They are reduced if you've got associated companies. So if there were 2 associates within this group, those limits would be divided by 2. If there were 3 associates, the limits would be divided by 3. There are no associates in this question, so I don't have to do anything, so that's nice. Also reduced if the accounting period is less than 12 months. Oh, now we're talking, because our accounting period is 6 months long. So that means that that limit is only 125,000 for 6 months, and that one is 25,000 for 6 months. So I'll sketch that again, still on my workings paper. The next thing that I'm then interested in, because I've forgotten by now, how much is the profit that this company has made? 95,000. So where does that sit then? Well, it's more than 25 and it's less than 125. So they're actually putting me into the marginal relief box. So I've got to use that formula to find out what my profit, what my tax is going to be on my profit. So that's what I'm going to do next. I now know my upper limit is 125, and I know that my profit that I'm trying to tax is 95. Let's go back to the question then, and we can get on with it. So, how do I start? First thing I actually do is say take the entire profit, so tax at the main rate. This is how we start, of 25%. So I'd take the full £95,000 and I would tax all of it at 25%, as though it's actually in the upper limit. It's not, of course, but that's my starting point. So tax it at the main rate. Then I say, well, that's not really fair, is it? Remember what we just said? It's in that marginal relief section. So it shouldn't be at the 25% because it's not above 125. It's nearly there, like it's at the top end of this middle range. So it's pushing up 125, but it's not there. So we're going to give them a discount. They're going to get some marginal relief next. So we're going to do that part next. So we work out the marginal relief and we deduct it. We use the formula that's given to us, 3/200 multiplied by the upper limit, which is 125, compared with the profit that the company has made, and see what we get. So it's basically showing us how much profit we've got, or how far away we are from that upper limit. And in our case, we are £30,000 away from the upper limit. So multiply that by 3/200, and it gives me £450 less tax to pay. Remember to deduct it and not add it, because you've already worked out tax at the highest rate. This is now a reduction because we're not quite at the higher rate yet, we're just sitting underneath. So the corporation tax payable is 23300, 23,300. So with marginal relief, and I'm glad we got an opportunity to practice one of those, marginal relief, the key things are sketching out the limits, seeing if you need to time apportion them, the reference material does remind you of that, seeing if you need to reduce them for a number of associates in the group, the reference material reminds you of that as well. If our company had profits above 125,000 in this scenario, then it would all just be taxed at 25%. And if the company had profits of 25,000 or less in this scenario, it's all taxed at 19. So the marginal rate working is only necessary for profits that fall somewhere in between the two. And that brings us to the end of that task. So I hope you enjoyed that one. There's plenty of others to look at. So please tune in for another. And maybe in the meantime, practice some additional questions on calculating corporation tax payable.